Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Today is Tuesday, the 14th of January, 2020. And you know what? Let's take a look at a couple things. Let's open up the chart right here, and we're going to take a look first at Deutsche Bank. We're looking at a chart of Deutsche Bank stock over the last, 5 years. And, what we see here is we see it going down to a certain price level of around €7, 7.5 euros. And it's been moving along sideways now for like a year at the same price level. Just not going any lower, not going any higher. I see that some entity, this is what I think, some entity out there is supporting and keeping Deutsche Bank from going under. That's what I think's going on. And they've been doing it for like a year now. And they're keeping the price at a certain level. Low level, very low level, but not letting it slip under. While they're deleveraging this bank as fast as they can. I think what it is I think behind the scenes there's some sort of a controlled effort, a controlled demolition of Deutsche Bank going on right now. Now, in other news about things, let's take a look at the silver price today. And here's what I want to note. Silver and gold, this has been a crucial little period right now. I see it as for silver and gold. Beginning the new year, we saw prices surge. We saw prices drop off for gold and silver now. And silver is back down 1774. I'm going to tell you, I think this was kind of crucial. At the same time, we saw gold prices slide. Let's take a look at gold right now. 1544. It's broken down below that very important level of 1550. What's caused this breakdown in gold and silver right now? Caused the prices to break back down. Gold back down to under 1,550, and silver to break back down under $18. What's caused this? I think these markets are still heavily manipulated. And if you guys don't know how they manipulate the gold and silver market, what they do is they sell paper short contracts into the market, making it appear like there's a lot more silver and a lot more gold than what there actually is. But basically what they're doing is they're selling fake gold, paper silver. And it's not real, and it's far more, there's far more of this paper than there actually is the real underlying asset that's supposed to actually price. The market is supposed to be priced off of the actual underlying asset, but in this case it's being priced off of paper, the excess paper that they're creating. And they've been doing this for a very long time. It's amazing that they can actually get away with this, but they've been doing it for a long time, and I think they're still continuing to do it to keep the price suppressed. But let's take a look at cryptocurrencies. And why I say this is crucial right now is investors out there are looking for anything that they can find. At this point, they're getting desperate because bond yields are so low. Quality investments out there in the corporate bond market, junk bonds and everything, it's all been over leveraged so far. The stock market's been pumped up to the moon, and everybody is kind of anticipating that this can't go on forever. Where do you invest your money? Well, a lot of people think gold and silver, but, big-time investors, they don't think gold and silver. They want something that they can push a mouse button, bang, boom, they've just made the investment, They don't want real physical gold and silver because they got to take possession of it, And so that's why they buy this paper short contracts of gold and silver, but still they don't like it because they say it's got no yield, and the price keeps fluctuating to the downside like it just has. And they want to make profits. They want to make profits. They don't want to buy in today at $18 and tomorrow at $17.75. They want profits. They want 7% per year or whatever. They want a profit. They want something that's going to have some yield. Yield is what they're after, you know. It's crucial. Cryptocurrency, you know, could become the best performing asset of the year because we see it moving up and sustaining these gains right now. Where gold and silver, it's moved up and it's lost its gains, you know. And this is kind of crucial because I'm going to tell you guys, there actually is a war going on for safe haven investment between Bitcoin and gold and silver. And you know, investors are going to look at the two and they're going to weigh them. Which one's better? Well, which one's performing better? You know? And this is what could actually happen. And also, which one can you buy easier if you're an investor? You know, how hard is it to take physical possession of cryptocurrency? Well, again, it fits in with the modern age. You just push a button, bang, you got it. Bitcoin's come, you know, it might take 5 or 10 minutes, but that's nothing, you know, no big deal. It's in your wallet. You've actually taken possession. How hard is it to take possession of real physical gold? Well, you got to wait 6 weeks. You know, and investors, they're not going to. I mean, which one? If they see one of them taking off and moving, and it's got, see, in the investment world, first mover advantage means a lot. And if you want to look at Bitcoin, it has first mover advantage of the cryptocurrencies. It's not the best cryptocurrency out there. It's slow, you know, but it's adequate to cover all of the system of the network. It functions adequately. It functions good. It's never actually failed. And, you know, we see Bitcoin's the leader because of first mover advantage of the cryptocurrencies. So we're seeing cryptocurrencies move up, you know, and this is kind of crucial right now. This is a crucial period. When investors out there right now are kind of like capital's getting ready to start moving around within the system, and it's looking for a home, you know, excess liquidity. It's looking for a home. There's cheap, easy money out there right now, and it's only going to get cheaper and easier, you know. So what is this cheap, easy money? What exactly is it? It's basically credit, debt, and they keep ever expanding it, bigger and bigger and bigger. They could keep this going forever if the general economy, the Main Street economy, stays up, you know. That's the weak spot in the whole thing, you know. But the Wall Street economy, they're just loving it. They're just loving it. They're getting more and more of it. They're just feeding them at the trough. They're like a bunch of piggies that they're feeding them at the trough. They're dumping all that liquidity into the system. It's just like swine foods, you know, into a big trough, and they're just coming in and feeding. You know, it's a never-ending cycle. But they're looking for places to put their money where they're going to get yield right now. And a lot of these places now are getting cut off because they're over-leveraged, way over-leveraged. And investors, they know when something, they can sense it when something is getting too over-leveraged and getting ready to fall in price, you know, they can sense it. And so anyway, strange situation happening. Let's take a look at the Dow Jones today, see what's going on. What we're looking at today is we're looking at it's still melting up, but it's not melting up so much anymore, not near as fast. We're only up 8 points today. It's 28,915. On our way to 30,000, and then on our way to 40,000, then on our way to 50,000, then on our way to 100,000. I mean, if they continue to pump money in, well, they're just going to take advantage of it. They're just going to continue to rise. The whole thing's going to continue to rise as long as they keep pumping money in. I mean, why not? You know, these investors, if they're going to get free money, why not go out there and roll the dice? You know, I mean, the Fed's got your back if you lose, and if you win, you make money. And so why not? Just get richer and richer and richer. If you lose, the Fed's got your back. Don't worry. They'll support you. If you're one of the swine that's feeding in the trough. That is. Okay, let's take a look now at crude oil. Crude oil is up 40 cents on the day. So we were seeing a steady decline in the price of crude oil, come down to hit a point at 57.79, and now it's bouncing a little bit. Okay, let's take a look now at U.S. Treasuries and see what they're doing today. We're looking at falling yields on the long end of the yield curve out to the 10-year. We're looking at 2.28 on the 10-year, 2.286. It's down 2.1 basis points. The U.S. 10-year is 1.825, and it's down 2.3 basis points. The U.S. 7-year is 1.743, and it's down 2.4 basis points. Now let's take a look at the U.S. dollar index, see what the dollar's doing today. Now, the dollar can stay strong because of what it's being compared against. Mostly the euro. And the euro is a hunk of stinking smelling brown stuff. So the dollar's being compared against that. Of course the dollar index can stay strong. It's a hunk of brown stuff too. That's what it is with steam coming off of it. That's all the fiat currencies are right now at this point, because they can print them to infinity. And in fact, with the dollar, they have to. They're going to have to print it to infinity because it's a world reserve currency. They have to keep supplying enough dollars to keep the whole system running. The whole system is a Ponzi scheme. And it gets especially bad when you move into places like the repo market, and how they're squandering that money off, and they're actually they're lending stuff around, like they'll lend bonds around from this guy to that guy, and bonds that they don't even have, and they'll create financial products that they don't even have as quality assurance, so that they can get lent money in the repo market. And the whole thing's a Ponzi scheme, and it could melt down terribly bad, and the meltdown has actually already occurred. It's like a nuclear reactor, and the repo market is the center of the reactor, and they've had a meltdown. And the Fed is coming in, and they're trying to manage the situation. This is a Fukushima of the financial system, and we're not all being told how bad it really is. But they're trying to manage it. They're in crisis mode, but they're not telling anybody that they're in crisis mode. The whole thing, that's at the core of the financial system. Listen, thank you guys for listening to this report. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the next video. Bye-bye, guys.